As if applying for college or grad school wasn't stressful enough, you also have to think about how to pay for your dream school once you're accepted. Congrats, you're in. Money, please. If you apply for financial aid, your school will probably include a student loan as part of your financial aid package. While this financial aid package can seem wordy and intimidating, the most important thing to understand is that there are two types of student loans: federal student loans and private student loans. Let's dive a little deeper on both of these. In this lesson, you'll learn what a federal student loan is, what a private student loan is, and how to choose the best loans for you. Federal student loans. A federal student loan is made by Uncle Sam, the good old Stars and Stripes. Federal student loans are made by the government with terms and conditions set by law. Congress actually sets the interest rates of these loans each year. There are many benefits to choosing a federal student loan. Seriously, a lot. Nearly anyone is eligible. Most federal loans don't require a good credit score or a cosigner. Almost every student with a high school diploma is eligible to receive them. There are postponement and repayment options. If you have trouble making payments after graduation while job searching, you can temporarily postpone or lower your payments. You can also take advantage of the many different repayment plans offered once you find work, like tying the amount of your monthly payment to your income. Does the government even take coins? The government offers subsidized loans. If you qualify financially, the government will actually pay interest on a subsidized loan while you're in school. You'll still be responsible for the principal of the loan, but Uncle Sam pays for your interest. A small victory is still a victory.
Victory!
Payments aren't due until after you graduate, leave school, or change your enrollment status to less than part-time. In other words, you don't have to pay back the government while you're cramming for finals at the end of the semester. While payments aren't necessarily due while you're still in school, you might still be responsible for paying on the interest accrued during that period of unsubsidized loans. Loan forgiveness. Trust me, you have nothing to be sorry for. This means that you might be eligible to have some portion of your loans forgiven or go bye-bye. Is that loan forgiveness? Coming. Like, seriously, you don't have to pay them back anymore if you work for public service. Some jobs that offer loan forgiveness include becoming a nurse, teacher, or working for the Peace Corps. Cameroon. Pretty cool. Finally, the interest rate is fixed. This keeps your payments steady and predictable. Plus, federal interest rates are often lower than private student loans. To apply for federal student loans, you'll need to file a FAFSA, the free application for federal student aid. To learn more about FAFSA and the types of federal student loans, be sure to check out studentaid.gov. Private student loans. Whereas federal student loans are issued by the government, private student loans are issued by a credit union, bank, a state loan agency, or a financial institution. One difference between private and federal student loans is the interest rate. Private student loans can come with a fixed or variable interest rate, whereas federal loans only come with fixed interest rates. A variable interest rate fluctuates over time, meaning your payment amounts will fluctuate as well. Another difference is that most private loans are not subsidized. That means as soon as you borrow the money, the loan will begin accruing interest. The last big difference is the application process. Instead of filling out the FAFSA, you have to apply directly with the lender. You'll also most likely need a cosigner. Reminder, a cosigner is a parent, close family member, or a friend who agrees to pay the loan if you do not. In other words, someone that you should be extra nice to during the entire process. How to choose the best loans for you. Applying for the right loans can seem overwhelming. I get that. One thing to keep in mind is that undergraduates can only borrow up to $31,000 in subsidized and unsubsidized federal loans throughout college if they're considered financially dependent on their parents, or $57,000 if they're considered financially independent. That might mean you'll need both federal and private student loans depending on the cost of your tuition. And hey, that's okay. There's no wrong choice or combination of choices if you know what you're getting into. Remember, generally, federal student loans have more borrower benefits and lower interest rates, so it might be wise to explore all of your options on that route before supplementing them with private loans. The more you familiarize yourself with the differences between federal and private student loans, the less intimidating the borrowing process becomes.